Hello, everybody. Thank you for joining us. We have a great session here today coming to us from Fintech Fuse. My name is Greg Palmer. I am the host of Finovate. I host our podcast, and I'm happy to be here today having this conversation with two really interesting guests for you to listen to. We've got Katharina Lueth, Chief Client Officer and MD at Raisin, and we also have Kathy Chang, Head of Fintech Partnerships and Senior Manager at DNB Group. Thank you both for joining me today.
Great to be here.
Yes, likewise.
So the topic that we are going to be talking about today is the idea that a recession is potentially coming. How does that change the fintech landscape in terms of partnerships, how banks and fintechs work together? Before we jump into that topic, though, I'd like to give each of our panelists a chance to introduce themselves. Katharina, I'll start with you. Can you just give us some background on yourself and your role at Raisin?
Yes, sure. Happy to. Thanks, Greg. So as mentioned, Katharina Lueth, I'm Chief Client Officer and MD at Raisin. Raisin is a savings and investments marketplace, which basically allows customers to access attractive savings products, but also investment products such as a robo-advisor, crypto portfolio, or private equity investments. We are actually partnering with over 400 banks and fintechs as part of our marketplace model. This can be anything from the larger names such as Deutsche Bank and Aviva over to fintechs such as Klarna or N26. We're active in around 30 plus countries, particularly noteworthy, I would say, Germany, our home market, but also UK, US, Netherlands, Spain, France. And I personally have been with Raisin since 2014, after a couple of years in management consulting, and in charge of everything that's operations. So both on the retail customer side, but also partner operations, as well as our direct to consumer proposition and communications.
Excellent. Thanks for that. Really interesting background. We're going to explore a lot of the different pieces there in just a moment. Kathy, over to you. Can you talk about your background a little bit?
Yeah, of course. Hi, everyone. My name's Kathy. I work in DNB. It's a Norwegian bank. I know it's the same abbreviation as the Central Bank of Netherlands, I believe. But we're the biggest Norwegian bank, and myself work as the head of fintech partnerships. And our team is responsible for the overall group-wise partnership initiatives, as the screening, scouting, and building partnership and partnership management, and so on. And I myself have been working in DNB since 2018.
Excellent. Well, yeah, thank you for joining us. And obviously, both of your organizations are just so active in this space on different sides of the coin, so to speak. It's going to be really interesting to get your perspectives. Now, as I mentioned, the overall topic for today is going to be, this idea of recession is coming. What does that do? Before we get to that, I think it'd be helpful, though, just to establish a baseline and get a sense of how you're kind of currently looking at partnerships. Kathy, I'd like to start with you. From your standpoint, and obviously from the standpoint of DNB, how are you guys thinking about fintech partnerships right now? What's sort of your general strategy as you're engaging with those companies?
It's a very nice question that you asked, and I've recently just heard from peer incubators and peer accelerator program in the Nordics that they call us fintech-friendly bank. So obviously that's a very nice thing to hear. And when I joined 4 years ago, obviously there was a lot of discussion around like fintech being the enemy of the bank, and then frenemy was the term. But nowadays, it's even a bit, when I say the words, it even sounds a bit cliche, because we believe that every fintech with a bank, there's a way to partner, and we just have different strengths. And our team is responsible for explore that opportunity. And if it goes well, then it's perfect. But if it doesn't, then what could we give an answer as soon as possible? And so yeah, that's how I think that's our attitude for now. Like every fintech has we see them as partners. There's definitely a way to partner. Just like is it the right time? Is it the right angle? Maybe yes, maybe not.
Yeah, and certainly there's no shortage of new fintech ideas coming out, and obviously you want to try and take advantage of a lot of those pieces. Katharina, you're kind of on the other side of it. As we were talking before, we actually pushed record here, a fintech that basically bought a bank, and so you can partner with people from the fintech side, from the bank side. Just can you give us an overview of just how you guys look at this kind of partnership dynamic in the space?
Yeah, sure. So indeed, for us in our marketplace model, ultimately partnerships with banks, but also fintechs are inherent to what we do. So what Kathy mentioned about really true partnerships being possible in this sphere is something that Raisin has believed since its very outset, because Raisin doesn't exist without being able to offer the savings products of banks to its clients. So I would say there's basically two standard ways how we do partner with typically banks, but also fintechs. One is on the savings product side. So basically, we help banks gather deposits from retail consumers. And in the end, these banks can be challenger banks, such as, let's say, Tandem, or it can be large traditional banks such as HVB or RCI, so the bank owned by Renault. On the other side, we also have a white label product, which is basically allowing, in this case, more often than not, also fintechs, but also traditional banks such as Deutsche Bank or N26 as a fintech example, to basically provide in a white label fashion their customers with the savings products that we have built our marketplace around. There is, of course, also, let's say, a third use case, which is then more us working with fintechs or tech providers in places where it helps us make our business model more scalable, more online, faster, better. So just to name two examples, our bank that indeed we own migrated to the Mambu core banking system, so a cloud-based core banking system, but also for identifying our clients, we work with ID Now, so another provider in the, let's say, extended fintech sphere.
Yeah, no, I think the scope of partnerships that you're both talking about is really immense. I'd like to just follow up if I can. Kathy, I'll start with you. Is there a specific type of fintech that do you look at a hole in your arsenal and say, we'd like to go out and target somebody who can do X, Y, and Z? Or do you kind of approach it from the other side, which is more just, seeing what's out there and trying to decide, is this something that can benefit us that we want to go out and incorporate into our stack? I mean, obviously it's a lot of work to go and bring somebody in. And so you want to be fairly sure that there's going to be a payoff. How do you approach that decision?
I think it's a balance between the two, but then I could only speak for myself. Been working in the same role, or our team has been in the DNB for 4 years. I think at the moment we are more for looking for some pleasant surprises of new kind of fintech or new kind of proposal that we haven't heard before. Meaning that it's been some solutions that maybe you have heard it. It's all great, but you have heard it more than one time. And if I could add on top of that, I think still, even these days, maybe 80-90% of the fintech that we had the pleasure to talk to aims to bring their great solution to the bank, selling their great solution to the bank to enrich our services or like build on top of our services, be the arm that we don't have, to create something that we don't have. So in a way, they're a technology provider, or in a more traditional term, maybe like a vendor, which is great as well. But what surprised me, or like what I am personally more excited about, would be a partnership that involves some kind of distribution, such as the one with Raisin, and distribution, co-creation, co-development. Those ideas we cannot come up by ourselves, and those relies on the fintechs to have an eye and to bring it to us, and that's what I appreciate as well. Yeah,
and I think one thing just to highlight there's actually quite a lot of self-awareness that is a part of that endeavor, because you have to be able to really look at yourself honestly and think, where can people do things that maybe we struggle to do? And I think this is one of the big challenges as banks look at partnering with fintechs, that being able to kind of turn that critical eye inwards and say, where are we struggling a little bit, and rather than looking at that as a negative, looking at that as an opportunity of something that you could potentially do better. You could bring somebody else in who can potentially be a real asset there, which is obviously at the end of the day what your customers are going to appreciate, the idea that there's not really a hole there any longer because you've gone out and kind of tackled it head on. Katharina, from your perspective, obviously, you're active on both sides. As you look at kind of the companies that you engage with, how do people tend to come into your network? Is it somebody looking for something specific, or is it just more people kind of exploring, hey, what can you do? Is there a way that we can work together? What's it look like from your standpoint?
So for us, because of our business model, it's usually a fairly specific use case. So on the one hand side, we really have banks that have a funding need, so they have a need for retail deposits, and we basically allow them to gather those deposits in an efficient manner. We allow them to gather those deposits from markets that might not be their home market. So there it's an extremely specific use case as such. And then on the, let's say on the distribution side, it's a bit more varied in terms of what the use cases are and also the types of collaborations. But in the end, it tends to come from someone wanting to offer their own customers a savings product in one way or another. And the way this is structured can be very different. This can be a large incumbent bank that says, I can't pay high interest rates to my clients, and I want a defensive product in the sense that I can pull out of the cupboard if my client threatens to go away. Or this can be a fintech that says, hey, I want to allow my customers to put a couple of euros to the side every single month, but gather interest on it. So you can build a multitude of features on it, but it tends to come from that specific need of either gathering deposits on the one side or wanting to offer your clients some sort of a savings product, but basically saying, rather than build it myself, I will source it from elsewhere.
Yeah, well, and certainly you can see where the impetus to do something like that would come from, right? It's obviously really difficult to build something like that, and the idea that you can go and partner with somebody and bring that in really quickly is obviously very attractive. So, we've been talking about things so far from the standpoint of what we've been doing over the last couple of years. We're in a moment right now where, I don't want to get bogged down in kind of the semantics of this, but there's a strong possibility that there's an economic slowdown coming. Whether it's technically a recession or not, I don't think is necessarily that relevant to kind of talk through. But at the end of the day, there are some indicators that the way that we've been doing business is going to have to change over the next couple of years. As we look at that, I think it's important to just get a sense of what you're doing from your standpoint, how things are changing inside your organizations, how it's kind of affecting the priorities. So I think I'll start with you, Katharina. Have you made any kind of initial changes or any sort of strategic shifts as a result of what a lot of economists are predicting here?
So for us, to be honest, we're in a place we've been looking forward to this point in time for a decade. And so we haven't been looking forward to a recession, just to be very clear. But ultimately, our product is selling savings products. And we have for the past decade been in a low to negative rate environment. And as you can imagine, it's fairly tricky to sell savings products in such an environment, because at some point, people stopped caring, despite the fact that real interest rates, so inflation-adjusted interest rates, were not necessarily that bad from a historic standpoint. They're actually a lot worse today with the current inflation being double-digit. But people are utterly unexcited about a savings product that gives them, 0.5% or 80 basis points on a one-year product. Despite that fact, we've been growing for the past decade, but now for us is really the point in time when, let's say on the growth side, things are starting to be fun because interest rates are increasing and they are across geographies. So UK and US are a bit ahead, but also in the Eurozone, central banks have been increasing quite aggressively, meaning that interest rates have been getting a lot more attractive for savers, which is good for our business. And on the other hand, deposits have remained in this rising rate environment a comparatively cheap source of funding for banks. So also the demand of banks for our product has actually increased. So in that sense, we're fairly atypical for fintech, because I wouldn't say it's currently, the happiest time in the past decade for fintechs in general. And what we are seeing, and what's certainly something we have always been, but maybe looking at even a bit more consciously now, is of course cost efficiency. So it is, I believe, in general, very healthy to look at, are you cost efficient in your growth? But in the past years, that was maybe not quite as much in investor focus. So that's something we're certainly seeing across the board, not just in our own company, that is a lot more in focus of companies, but also of investors.
Well, I mean, first thing I'll say is I don't know what you're talking about. People love talking about basis points. The idea of, whenever I go to parties and I talk to friends outside the industry, when the topic of basis points comes up, you just see eyes light up in the room. So, no, it's obviously something that I think you're spot on. It's something which these kind of opportunities, these situations do come with some opportunity to, change things a little bit. We saw something very similar at the end of the first decade of the millennium. In 2007, 2008, there were quite a few major shocks to the financial system. Obviously, those weren't very pleasant for a lot of people, but a huge number of companies came out of that. A huge number of new technologies, which have gone on to gain incredible traction over the past decade plus, came out of that environment. And so we may very well be in a situation here where there are going to be some opportunities coming that we haven't been able to really see for a little bit. Kathy, I'd like to turn it over to you. Obviously, you're coming at it from a different standpoint. What are you guys doing on your side as you look at what the next couple of years could potentially hold?
I have to echo what you said, that I personally feel that, of course, it's not super exciting that there's signs that the recession is coming, but then new environment brings new opportunities. I myself personally find myself like checking more times of I turn into the app more often to check how the electricity price shifted on a daily basis even, and I check more on the coupons in the grocery stores app and how much balance I have there as a bonus point. I do that much more often these days, and I think these mentality or behavior changes bring opportunities, not just for the bank, but also for the fintech. And I'm yet to hear more from the fintech what might be cooking actually. So cost saving is definitely one thing, but I wouldn't say that the product roadmap of our bank has changed drastically because of this. It's still steady, but we're welcoming more input because of the environmental changes. And I know data-driven credit has been top of our agenda to make credit more fast, more precise, more readily available when people need it. That's another area that we've been looking at, and probably will look even further into and make it happen faster.
No, I think one of the things that struck me about what you just said is the idea is at the beginning that you kind of want to, you're dealing with a lot of the same things that your customers are dealing with, right? The concern about prices, the idea that you want to go and you find the coupons to keep the prices from getting out of hand. I think putting yourself in the position of the end customers that you're dealing with is obviously really important, because ultimately we probably don't know at this stage what all of the challenges are going to be for those groups. But I think the companies and the banks who are able to respond really quickly and meet the needs of those companies or those customers as they arise are going to be the ones who rise to the top. Do you have a mechanism inside DNB for kind of tracking customer sentiment, or is this something that you dedicate a lot of time to try and understand where people maybe need a little bit of extra support?
Yeah, we do have a team that interview customers on a regular basis, but most of us are also consumers ourselves or retail customers ourselves. So it's also relying on people like us who work in the bank and to discover our needs. I think sometimes people are happy where they have or what they have with what they have, but then you need sometimes banks need to be the one that, when iPhone came out, it's people didn't know that it could exist. but it's awesome for sure. And that's a kind of innovation that we are looking for.
No, that's a really good point. I mean, I think the idea that we don't know exactly what could exist, right? There's the idea, here's what I think I want right now, but and I think especially consumers aren't really, obviously, as much as we are in the industry, they don't know what's possible. They don't know what they could potentially be doing, and getting them to understand what could be out there and kind of delivering that to them, anticipating those needs and kind of getting out in front of them is obviously a real challenge. Katharina, what's your perspective here? I mean, obviously, I'm sure from your standpoint, there's a lot of different types of customers that you all have to stay on top of, a lot of kind of different needs going on. How do you kind of track that and manage that?
Yeah, so indeed, what we are seeing, so in the end for savings, we have a bit of multitude of sentiments, right? So on the one hand side, there's obviously a large demographic for whom it's currently getting a lot more difficult to save, just because we do have double-digit inflation. So that does mean that for a lot of people, the disposable income that they can put to the side has become less. So it's also even more important for us to help them make sure they make the most out of it, right? Currently, you won't get interest rates that make up for all of inflation, but at least you want to make up for as much of it as you can. The other thing that we tend to see is how do people look at savings in terms of, is it something for rather long term versus shorter term? So whenever we have macroeconomic uncertainties, a lot of external crises, we have the aggression of Russia in Ukraine, so people feel a lot more uncertain about what's to come. So then people tend to look at rather shorter term products because they want to have that flexible access of their money in order to be able to react faster. So we obviously have a broad portfolio of products that allows them to pick and choose there. In the end, it's all self-selection, but yes, we do need to keep an eye on what's happening there.
Yeah. So looking at it from both of your standpoints, obviously you have a really kind of bird's eye view of a lot of the aspects of the fintech ecosystem. How do you expect the ecosystem to change, both in terms of, the types of products that are coming, the quantity of companies maybe that are getting started here? Do you expect any kind of a big shift in how the fintech ecosystem actually operates here if there is a recession? Katharina, I'll start with you on this one.
Yeah, so I wouldn't necessarily say a big shift, but we obviously see a number of, let's call it segments, that are under a bit more pressure than others. So currently we have on the one hand side, crypto. I mean, people keep talking about the crypto winter. I don't think DeFi and crypto are going away anytime soon. They're here to stay. But we will probably see a little bit of, let's say, survival of the fittest. And I think that's true for a lot of those areas in fintech where we see a bit of pressure. Similarly, all the buy now, pay later providers. In a recession, that's when you stress test your loan portfolio, right? So I'm sure we'll see some movement. I'm sure we'll see a bit of consolidation in a number of segments. Also, just because investor money has become something more of a restricted resource. So there's still a lot of money out there, but investors are being a lot more cautious in where they spend it. So I wouldn't be surprised to see quite a bit of consolidation. There might also be a bit of M&A activity going on, especially with those players that filled their pockets last year when money was not quite as tight. And on the other hand, it's as we said earlier. So with big shifts come big opportunities. So I suspect that it's great for savings marketplaces, whereas maybe investment products or trading apps are currently not as in demand. On the other hand, I suspect that also anything that has to do with what Kathy mentioned earlier, so spending habits, helping people keep an overview of their finances, helping them get into good habits of monitoring their own finances. So in Germany, there's a company called Fabit that does this. I think there's the Credit Karma. So companies that also help people manage their credit score in times like these are also likely going to see some nice innovation over the next couple of years.
Yeah, Kathy, I saw you taking a big breath right as I threw that question over to Katharina, so I'll let you jump in. It looked like you had something to say.
Yeah. Yes, I have something to say, but I have to echo what Katharina said. But also, I think working in with fintech partnership for 4 years, you could see that every year there's a buzzword for what's hot in the market. So maybe 4 years ago, I think it's crypto or blockchain, and then open banking, and open banking is still staying. And then gradually, I think this year it's embedded finance. Yeah, I guess everyone knows about it. And then because of the trend, we also start to see new fintech that's actually embedded finance builder companies. So they help companies that want to become embedded finance. They want to provide embedded finance solutions inside their app or inside their platform, like wallet, etc. So it's not the traditional payment company in that sense. I never seen those company in before this year. Also, like Katharina was mentioning, buy now, pay later. It's now we know it's BNPL. Like you just have to say because everyone knows it. But this year we also encounter. Maybe I'm not as knowledgeable, but it's the first time I heard something called earned wage access. It's abbreviated to EWA, meaning that people want to actually have access to the salary that they have already earned, so that they could pay down their bills, etc. And this comes, I think, together with the economic environment. It's not something random. Yeah. So
Yeah.
I believe there will be more type of new solutions, new ideas that comes out. Just like every year, there'll be something new.
No, I think you're spot on. And earned wage access is actually one that I've been really fascinated by as it's come to prominence. And I think you think about, how many people all over the world have to pay to access their own money, whether it's through check cashing fees or whether they just have to wait until they actually get paid while somebody else is earning interest on what should be their money, right? You think, that's one of those things where there's an area where fintech can really come and provide additional help to people in a moment where they really need it. The idea of just getting, your money 2 weeks earlier can actually be quite a substantial knock-on effect. One of the things that you've both kind of talked about here is, the opportunity that comes with this kind of environment. Is there a sense that to some extent, if you want to kind of build a new model, you have to maybe break the old model a little bit? And so when you have this sort of these moments where there is potentially economic turmoil, that can actually be a situation that sort of forces you to look past the current banking model and think about what you could do differently. Is it do you have to break the old model in order to move forward? Whoever wants to take that one, go ahead.
So I don't think you necessarily have to, but I think sometimes these bigger shifts can just be a very nice impulse. So I'll give you one example, which was the COVID pandemic. So apart from all of the downsides that we've seen, this was let's say an external shock that pushed an entire segment of the population into online products that previously didn't use online products. And it's not for lack of banks and fintechs trying to make people use those online products, but sometimes it's really tricky to basically get that adoption of a product. And I think this is where, excuse me, these type of externalities can really help. So same as the early wage access you mentioned, it's something where a situation like this, where you're in more of a financially stressful situation, will make you think about these things. So I think it's definitely a great opportunity.
Yeah,
Yeah,
absolutely.
and to add on top of what Katharina just said, we also built a partnership during COVID, and that's for it's to help our SME clients. So inside of our interface, inside of our app for SMEs and on our internet banking, besides our own credit product, financing product, we start distributing a flexible loan, or like short-term flexible loan product from another bank, which is they're a purely digital bank. The money can be in your account within the same day, and then the credit decision is made like instant without you having to talk to someone. It's very different from what people has experienced from the bank previously, and that's also something we try to help our customers although it's a product from another bank, but we see that people actually appreciate this kind of choice that we're giving them. It's similar to what Katharina just said earlier. Yeah.
Yeah, no, I think that's a really good point as well. So one of the things I wanted to make sure we did with this, we spent a lot of time talking about kind of the big picture of what might change. I think it's important that we sort of bring this back into a more ground level, and for people who are listening, who are kind of thinking to themselves, what do I actually do about all of this? I think that's going to be something that will be really helpful for us to explore. So, Kathy, I'd like to start with you. As you look at, how yourself, how you guys partner with fintechs, what advice do you have for, early stage fintechs who are looking to kind of get the attention of someone like yourself or like DNB, when they have, let's say, a great new idea, but they just don't know exactly how to get it out there? What advice do you have for those companies who are looking to engage with yourself?
And the advice I'm giving is the same that I'm following when I reach out for partnerships. So it's not just I'm not here coaching anyone, but for instance, I have expressed this opinion in the past on LinkedIn just to share. I know a lot of fintech will, although they're in a similar field, they're not necessarily doing the exact same thing. And then when they're approaching banks, they feel that they're competitors, although they're really not. To banks, you are actually great fintech within the same segment. Like perhaps it's all gonna be integrated with our mobile bank, for instance. And I've been thinking that it's great that if you come with you come together, that you have already partnered up, so it's a all-in-one solution, so we don't have to do 3 times. So it's overall, it's like fintechs can partner with each other first and come up with a greater solution. So it's easier to sell, and then you will have even a higher starting point than maybe your peer who is standing there alone. So that's the first advice I will say. And the second is, come not with a generic proposal, maybe. I would say that it's a coincidence that I'm sitting together with someone from Raisin, but 4 years ago, when I started in DNB, we actually had a great discussion with Raisin. I'm not saying it to be nice. It was still by far one of the top proposal or like presentation I've heard, even after 4 years. It's just that Raisin came very prepared, very well prepared, and with numbers that they have looked into our balance sheet and then projections. And also any question that we would have, not just me, my team, also someone from Risk, someone from and they always have answered. And always, like, maybe before we ask questions, they will be like, oh, now you might wonder, blah, blah, blah. And the slide comes, and it's just very, and unfortunately, it didn't end in partnership, because that time I don't think we was the right time either, but also maybe our digital platform wasn't as ready as we are now. So I'm just thinking, like, we should catch up afterwards and see what goes from there. But that's like, it's just to show that it could be a cycle, and partnership doesn't happen like immediately. Sometimes I feel that maybe you are doing you are working on you're building a sauna for your home now. That's what you want to focus on, and someone knock at your door and want to sell you a smart home solution. It's really nice to know that this kind of solution exists, but that's not what you have the budget or what you're aiming to do. But maybe three years down the road, it's something that you would like to reconnect and you want to think again. Yeah, so don't come with a generic proposal. It's the same for me. When we reach out, we also try to read up and come up with a tailored proposal, and that really makes a big difference.
Oh, 100%. I think if you think about it from the other side, as a bank who's approaching an end customer, there's so much pressure on the bank to prove that they know that customer. I'm not going to offer you a home loan, a week after you just bought a house, right? We have the data to know that, we can see what customers are doing. And just as the bar is being raised for banks engaging with their end customers, it has to be the same kind of thing for fintechs who are looking to partner with financial institutions. You need to demonstrate that you understand the person who's sitting across the table from you, the organization who's sitting across the table from you, and making sure that you have something to offer them as an individual entity, as opposed to just kind of, here's what we do. Do you want it? I think that's a really astute one. Katharina, I'll turn it over to you, because obviously, you've seen this kind of dynamic from a couple different angles here. What advice do you have for people who are looking to be successful?
Yeah. So first of all, thanks, Kathy, for the compliment. And indeed, I think that's one thing to keep in mind. So B2B sales cycles are long. So I think we've had banks that we spoke to like 8 or 9 years ago that were onboarding now. So I think that's really something that's always tricky, especially in that early stage in a startup where you really are craving to just get stuff started. Sales cycles in B2B are long, and with banks, they might be even a little bit longer. But I would say two things that can make it a success is really one, have a very specific use case. And it's so one part is, yes, know what your partner is about and what they're doing. But it's also, so it's not about, this is my great product. And I mean, we all, by definition, we spend so much time building our product, so we're absolutely in love with it. But it's not about how great your product is, but it's how awesome is the use case for, say, DNB's customers, or for a very specific problem that you can solve for your counterparty. So really keep that in mind in order to make it work. And then the other thing, and I think this is where that sauna example is the perfect fit, it needs to be something where you end up matching the priority of your counterparty. So it can even be that you have the most fantastic use case, but if this is just not, so if I'm trying to sell you deposits, but what you're currently really focusing on as an organization is loans, I will not come through. Because if that's the sort of top priority, then it will have very little chance of success, despite the fact that it's a good use case and despite the fact that I'm prepared. You need to be lucky enough, in a sense, that the priorities match up.
Yeah, I'm reminded of a company who came across our stage at Finovate a couple of years back, and I'm not going to throw anybody under the bus here, but they had basically a platform that said, we can build a blockchain for any purpose on demand. And they stood up in front of the room. He's obviously a really brilliant guy, really brilliant company. And the audience just had no idea what to make of the demo. Well, what do I need you to build me a blockchain for? And this is, I think, a great example of somebody who had amazing technology, was clearly, very skilled, but they just, at the end of the day, didn't understand where to point their own technology. They were sort of saying, we can do this. Who wants it, and why do you want it? Getting to that next step, I think, would have really helped them, saying, here's an example of how building your own blockchain in-house can actually do, improve your bottom line, can get you more customers, whatever the case may be. I think that's a really crucial step that a lot of, particularly the early stage companies, struggle to get to, because you spend so long thinking about what can I do from a technology standpoint that you almost forget about the other side. Why does somebody need to care about what I can do or not? So hearing you both talk about that just reminded me of that story. I see we're coming up on the end of our time here. There's one question that I wanted to make sure we got to, because it's a slightly more frivolous one as a place to kind of bring us home. Are there any kind of just disasters that you can talk about that sort of immediately shut down a partnership conversation that you've seen, sort of what's really high up on the definitely don't do this list? I think that'd be a fun one. Who wants to take that one first?
Maybe I can start first. I don't think there's something that is immediately shut down. Obviously, if you have a very great product or service that it's unheard of, but it's definitely needed. How bad your attitude or how bad your email is written, we will still find out, because that's our job. So, but maybe it's when we see, as I just said, when I see it's a generic email that you probably send to 1,000 banks. And then it's a similar solution that we have seen before, then it's less likely that I will respond to it. And also I've seen many times that people maybe contact us for something that they it's actually related to something similar to an online checkout solution. So the partnership will be only relevant if we have that solution, but we actually created that solution and spin it off. It's called Vipps. It's the biggest mobile wallet in Norway. So the fact that you're reaching out to me, it just shows that you haven't done your homework. And then I will still write an email to explain, but it's not a good first impression. Yeah.
That's very nice of you, I have to say. I think I talked to a lot of people who just wouldn't even respond to an email along those lines. So the fact that
Well,
you're even
not
kind
the
of
first
sifting
email, but then
through,
if they, sorry, but if they trace me, then maybe I'll
yeah,
reply. But yeah.
yeah. Katharina, anything that you wanted to share here? Any sort of big red flags that you can talk about?
Yeah, I would also go with if it's too unspecific, too generic. Like if basically you open a presentation and all you read is buzzwords, but you can't really tell what is it you're actually doing, what is actually different, what's actually new. That would make me highly suspicious.
Yeah. For instance, let's help you with digitalization. What does that mean? Like, Norway is one of the most digitalized country in the world. Like, yeah, it's too bus, as you said. Yeah.
No, I mean, everybody needs help with digitalization. That's just like, obviously. No, that's a really fun place to end. So I want to thank you both again for taking time out of your schedules to talk to us. Katharina Lueth of Raisin, Kathy Chang of DNB Group. We are talking to you on the Fintech Fuse platform. For more content like this, sign up to Fintech Fuse. My name is Greg Palmer, and again, I'm coming from Finovate. It's been a pleasure hosting you all for this little bit of time here. Obviously, a lot to unpack, a lot to continue to watch as the next couple of years unfold. There are going to be some big picture changes in the financial services space, and now it's up to all of us to decide whether those changes can turn into something positive. I certainly hope they can. I think the sentiment from our panelists is that there are some possibilities, some optimistic ways to sort of look at what's coming, but ultimately it comes down to each of us as we look at how we can do what we want to do better. So thanks again. Hope you've enjoyed it. And for more information, more content like this, do give us a subscribe, follow us on Fintech Fuse. Thank you so much.